Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Zillow Group. So Zillow Group is down substantially from the highs of February. It's down more than 30%, well into correction territory. Investors are quite uncertain how Zillow Group is going to play out against open door technologies and the whole dynamic around iBuying. So I'm going to highlight its growth opportunities, then we're going to dig into its prospects. Finally, I'm going to bring this all together and talk about its valuation. So I'm going to just jump right in. So Zillow Group is growing at a rapid rate. You can see here that its guidance for Q3 is for the stock to be up 200% year over year, right? So clearly, company is growing at a rapid rate. Okay, so at least that is established. Because if you look at the share price, it's actually down significantly. You can see here that it's down from the start of the year by 30%, but from the highs, it's down significantly more from the highs of February. Now, when it comes to Zillow Group, it has three segments, okay? It has the mortgages, which is too small, we're not going to discuss. Then there's the homes, which is iBuying, and there is the IMT. IMT stands for it's Internet and Media Technologies, I think it is. And it's basically, within that, it's the advertising business. So this is really the biggest within that. It's really about an advertising business, okay? So within this IMT segment, there is the Premier Agent. The Premier Agent is basically its ability to offer an advert and drive leads forward to the agent, okay? So it's a very compelling business because Zillow gets paid upfront for showing that advert on its website, and then the agent gets a proportion of the total voice or the total share of the advertising from that zip code. So it's a very compelling business, okay? It's a high margin business, it's attractive, but one of the things I wanted to highlight here is that the Premier Agent accounts for 75% of the IMT segment, okay? So this is a high proportion of the business and it's growing at a reasonable rate, okay? And it's highly profitable. The other thing that I wanted to highlight is the other segment, the other, written there, that accounts for about 25% of the IMT segment, okay? What Zillow did a few weeks ago is it bought in this business called Showing Time, okay? So Showing Time was a business that cost Zillow Group approximately 500 million, okay? So it's less than 5% of its market cap. It's not a big needle mover, but it is signaling to investors that it's not going against and doubling down on its advertising business. It's going and doubling down on its other opportunities segment. So it's about allowing the agent more control over appointments. It's about managing its appointments. So it's facilitating the amount of solutions that it offers to agents and makes it more compelling, makes its business more sticky. So this is something, it's not a needle mover, but it's something that's quite interesting to think about when you think about Zillow Group. Now, let's get in and discuss the big overarching theme here, okay? Zillow Group is trying to play catch up in iBuying. So iBuying is where you as a home seller would go to Zillow Group and you'd say, okay, Zillow Group, just give me the price of my property, and then an agent comes in and does some inspections, and you don't need to do any repairs or anything. They take hold of everything, they give you a price, and then within like a week or so, cash shows up on your bank account, and you can exit your property at a time that suits you. So it's very, very pain-free, okay? Now, Zillow Group is playing catch-up here because open door technology has just come out of the blue and it's very aggressive and is growing at a very, very rapid rate. Now, for the interest of disclosure, I am long open door technology, but I don't think that distracts from what I'm trying to point out here. That what investors are quite unsure about is that there's this business, Zillow Group, and it used to be very, very profitable within advertising, had a moat around advertising for properties, and now it's going from a category leader to a company that's kind of a tier 2 company. Further complicating everything here is that the home segment is growing at a very rapid rate. So if we make some assumptions, okay, so if we assume that from Q3 21 into Q4 21 sequentially, that Zillow's home segments, is the iBuying segment, grows by 5%. We're coming into close to 1.6 billion of revenues. That means that relative to last year, that revenue line is going to be up 5x, okay? So in Q4, it's going to be up 5x. Now, if you think about it, that implies that whereas investors were previously thinking about Zillow Group as a highly profitable but kind of steadily growing business, now it's the inverse. You got a very rapid growing business, but it's going to be quite unprofitable. So that's kind of confusing investors. Investors don't like change. Investors hate. The second thing that they like the least after bad news is uncertainty. And this is uncertain. Like, can they get back into being a leader in the space? Can the margins be compelling enough? What will the margins look like? I mean, it's too many questions, and investors don't like questions. Investors just want a clear point of view to go after. Now, what I wanted to highlight very briefly is that if you compare Zillow, so Zillow charges approximately 7% all in for the transaction costs, okay? And similarly enough, Open Door Technology also charges about 6 to 7% in that ballpark. So they're very, very similar. And even though home sellers will kind of be comparing and contrasting the two companies, ultimately there's enough space for both these companies. It's not going to be one market leader. And investors have kind of got so caught up on this idea that only one business is going to dominate. There are plenty of businesses where it's not even a duopoly. There's like so many different players, and it's just going to be a case that investors are just too much latching on to this uncertainty right now. And I think that investors are being just punishing the stock too much. So one thing that I wanted to highlight is that starting approximately as we progress into the next quarter, 75% of Zillow is going to be its home segment. So it's going to be such a big overarching theme, and it's going to be growing quite significantly. So even though investors are now really unsure, give this another, let's say, 3 quarters or so, and investors are going to be like, oh my God, there's this business, and yes, it was different before, but now it's growing so fast. And investors are going to really kind of turn around and reprice this. So presently, the multiple is compressing, but it reaches a certain point where investors just capitulate, and it's like, okay, yeah, I might not be growing that fast, but ultimately, it might not be growing as fast as Open Door Technologies, but ultimately you have a business that's growing here kind of much more than 70% year over year over the next several quarters. So investors are gonna I think that there's gonna be a turnaround here, and investors will come around and think about this quite differently. The other thing that I wanted to highlight, but I already touched on this quite a few times, is right now, as a Q2, the EBITDA margins are approximately 13%. But as I've already mentioned several times, as the home segment continues to grow at a rapid rate, together with the fact that the IMT segment, they're already signaling that they're gonna basically not be as profitable going forward because they're investing much more aggressively for growth. So with these two combined, you're gonna have a less profitable company. So whereas the EBITDA margins were 13%, over the next 3 or 4 quarters, I wouldn't be surprised the EBITDA margin comes down to approximately 5 or 6%. And that's another thing that is disenchanting the previous shareholders of Zillow, because you had a business, everyone was kind of holding on to this investment because it was a highly profitable business, and then you were kind of indoctrinating into a slow growth, predictable, high margin business, and now it's going to be high growth, less profitable. So investors don't like that, but I suppose once the shareholder base is churned out over the next several quarters, I think that investors are going to latch on to a very different story here. So in any case, if you want to find out what kind of stocks I'm interested in, or you're just kind of wanting someone to help you think about investing, or to someone to give you some hand-holding how to become a better investor, don't forget to check out my marketplace. It's called Deep Value Returns. You're welcome to check out what other people have said. I got my 5-star reviews. You can check out that, and really come on board, get involved in the chat room, and I hope to see you guys soon. Okay, that aside, bye-bye.